Hello everyone, welcome back once again. So today, guys, we're gonna talk about continuation pattern and reversal patterns, and then we're gonna go deep and try to see which one is it profitable and then which one is it not. So before that, please help us to grow this channel by subscribing there and turn off the notification button there. So I'm gonna start with a continuation pattern. So continuation pattern, it is indicated here, guys. So but before we dive into what is happening with the continuation pattern, we need to know what a continuation pattern is. A continuation pattern is an indication that the price will continue to move in the same direction. So this type of a pattern, it can be spotted in the middle of an existing trend. So meaning before we can bot our before we can catch our continuation pattern, we must at least have a trend first. Yeah. So and then we now have a reversal pattern here. So what is a reversal pattern? A reversal pattern, it is when the market signals a change in the trend direction. So most of the time, a reversal pattern, they're not easy to be spotted like in the market then. So we can easily spot the continuation pattern. Why? Because of we already have a trend. So now I want to talk about why I prefer this type of patterns. So another thing, guys, remember in continuation pattern and in reversal pattern, there are different kinds of those those patterns. For example, and also in continuation patterns, I prefer a bullish flag. This is a bullish flag, and then there are still other patterns for ascending pattern, rising wedge, and others. But I found a bullish flag and bearish flags more probable, guys. Yeah, I've been testing this type of patterns, I think, for 2 years now. So and then I realized that a bullish flag and a bearish fresh are really working. So for a bullish flag, before we look at the reversal, let's look at what is happening in the bullish flag. So in the bullish flag, guys, or a bearish flag, I'm gonna talk about a bullish flag because of it's the opposite of a bearish flag. So in the bullish flag, guys, now I want to talk about like the type of entry we must take when we take these patterns. So let me take this thing. So in a bullish flag, we have two types of entries. Then we can get an entry like here. We can have an entry there, put a stop loss down here, or we can have an entry down here and put a stop loss here. I want to show you the different types of I want to talk about the different types of entries right now. So we have a risk entry and a reduced entry. So this one right here now, it's a risk entry, and then this one, it's a reduced risk entry. So how are they different, like this type of entries? So for this one, guys, you can see that like when you talk about a reduced risk entry here, for this one, we enter when the market breaks here, meaning when the market breaks here, it already commits that I'm going up. I now broke this channel. The market tells us that we should enter there and then place our stop loss where? Somewhere here. Can place our stop loss somewhere here, yeah, below this low. So we enter there. So it was for the it was for the reduced risk entry. So now we have a risk entry. Risk entry is gonna be down here. The stop loss would be here. So for this one, it's still a this risk entry is not the type of trade like we prefer. Why is it not the type of trade? Why is it not the type of trade we prefer? Because of the market didn't commit yet. It didn't commit that I'm going up right now. The market might still continue coming down before and then later on go up. But when it comes to this risk I mean this reduced risk entry, the market already committed that now. So I broke this channel. Now I'm ready to go up. So we can spot another difference with these two types of entries there, guys. we can see that we have this thing, what we call, we have when it comes to risk managing on like on this type of entries. If you can check this one here, guys, if we take a risk entry, our stop loss is gonna be tight, meaning if the market it were to if the market it were to go against our direction, we're gonna lose we're gonna lose a little here because of our stop loss is tight here. But look what happens like in the, sorry for that. Look what happens in the reduced risk entry. In the reduced risk entry, our stop loss is huge. Our stop loss is huge this side because of like when you enter here, you still have too much space of placing. You still have a like there's too much gap between your entry and your stop loss. There, your stop loss is gonna be below this low here. That's why I'm saying this type of entries, risk entry and a reduced entry, they both have advantages and disadvantages. For a risk entry, I mean for a risk entry here, the stop loss is tight. For a reduced risk entry, the stop loss it is stressed. So, but for me, I personally prefer this one, the reduced risk entry. I would rather place my stop loss down here rather than entering with the risk entry here. Yeah, I think I've explained this one quite better right now. So now I'm gonna talk about sorry for that. Now I'm gonna talk about a reversal pattern. So what is a reversal pattern, guys? A reversal pattern, it is when the market signals a change in the direction. So let's say, for example, we have this high like right here. Sorry for that. Let's say we had something like here there. Maybe it's the previous low. I mean the previous high when the market was somewhere around the side. Maybe the market came here and then it came up, joined this one there. Then we're having this thing right now. So the market, when it comes to reversal, guys, reversal patterns are so difficult like to spot. They are not easy reversal patterns. You cannot easily find a reversal pattern. Meaning for a reversal pattern, before you take an entry where the market is reversing, the first thing you must have a point of interest. Point of interest, it can be a previous high, it can be an order block, or it can be a support, it can be a resistance. That's why I'm saying like they're more difficult to spot these ones rather than the continuation ones. I personally prefer taking continuation trades than reversal trades. It works like very well. I think honestly, like I would rate a continuation pattern in a scale of 1 to 10. I would rate them on 8 there. But this one's, I would rate them on 6 there, guys. 6 or 5, because of most of the time, the market likes going up or down aggressively, taking out those people who think the market who think the market might reverse. You know, guys, like when you trade, you must always follow the trend, guys. If you follow the trend, guys, there's no way like the market can keep on hitting you. But if you trade against the trend, that's when the market would continue hitting you, guys. So now I want to show you here, guys, what we have like here. So if we're looking at the real charts here, guys, we are seeing what do we call? We are seeing what is this thing? The previous high. Then now we're gonna talk about the reversal pattern. So on a reversal pattern, we can see this thing, guys. Look what is happening here, guys. Now what do we have there, guys? We're having a rising wedge, guys. The market, when it comes to this type of a pattern, even though I don't really prefer it, but this one I would personally take it because of there was a previous high there, indicating that the market, when it reaches here, it might change the direction. Now I want to talk about what we call. Now I want to talk about the continuation pattern. For the continuation pattern, we prefer to take the bullish flag. So we can spot our bullish flags here, guys. This is the first bullish flag, and this is the second bullish flag. I want to show you why I prefer the flags rather than why I prefer what you call a continuation rather than a reversal. So here, guys, first of all, I wouldn't have taken this continuation pattern. Why? Because of the market didn't indicate a trend yet. But after the market broke here, the market showed me that it's going up. The trend is we're on an uptrend. But for this one, guys, here, I would have taken this one. I would have taken this one if I were to take a position in this one. I prefer this one rather than this one because why? Because of like here we didn't have a trend yet, but after the market broke here, we now have a trend that the market is going up because of why we have been breaking at this previous highs here. Even here we broke this previous high, meaning the trend is confirmed that we are moving in an uptrend. So for this one here, guys, those type of entries I spoke about before, here I would take a reduced risk entry with a huge, sorry for that, with a huge stop loss here. But there are others who could have taken this risk entry with a very minimal stop loss down here. It all goes to which one you prefer. But for me, I prefer taking a reduced risk entry rather than a risk entry. Yeah. So guys, I think I explained these things better because of like some people they've been inboxing me wanting to know which type of pattern should they focus on. But since you know that guys were trading Smartman and Falco on this side, I can always try to help you guys. Yeah. So for you guys, also try to help us uh, by subscribing into our channel, guys. We're gonna be providing you with the 2 to 3 videos a week, guys. Yeah. So today is still Tuesday, guys. I hope you're gonna have a profitable week, guys. And then we're gonna see you in the next video.